Hi, I'm Hashim Kudsi, co-founder of Liwa Capital Advisors. Over the weekend, I caught up with an ex-colleague of mine, Mark Cutis, who headed special situations at ADNOC, and now he is chief advisor for finance and investment at ADNOC. We wanted really sort of to talk about the fast-changing world, which in Mark's point when I met him a week ago, he said it's giving him a headache. So, Mark, maybe if you can start by elaborating on that headache from the fast-changing world.
Hi, Hashim. Thanks for organizing this. I think it's very useful to be able to exchange these views periodically, especially in the current environment. And I think what we're seeing, and I've been working in finance for 44 years, and I don't seem to recall ever having experienced any environment that is characterized by such tumultuous change. And if you think about it, especially now because of the election in the US, we seem to be obsessed about what's happened in which state was blue or red, but there are far bigger changes that are occurring not only in the US but around the world. So if you think about it from a geopolitical standpoint, we definitely moved into a multipolar world, which has actually increased the danger the danger situation for everyone actually, because before we had two camps and there was a relative standoff. Now there's a lot that's happening, whether it's in the Eastern Mediterranean or whether it's in the Baltics or whether it's in the South China Sea. So the geopolitical situation is very tense. If you turn to the economic situation, it's obviously very apparent that with the onset of this pandemic, people have had to revisit and review a lot of what they're doing. And just us being on this call, for instance, tells you that something profound has changed in the world. As a point of interest, if you think about Zoom as a company, which not many people knew well before the pandemic, this company is now more valuable than Exxon. So it kind of tells you in that sphere what's happened. So then if you look into the financial world that we inhabit, you have a very strange phenomenon where we have interest rates that are below 1%, even though inflation is at 2%. And the Fed has engaged, again, in especially unusual movements to flood the world with liquidity. So if you take all that together and try to make sense out of it, it becomes very difficult. And I think this is what I was alluding to about that the world is giving us a headache.
Yeah, I hear you, Mark, but there is kind of, a part of me also that looks at all of these changes as giving us really a chance to revisit a lot of the things we're doing, whether it is inside our household or, at the bigger picture in terms of society. Now, now I think the digital world itself that we were hesitant to jump into, we found ourselves really sort of in the midst of it, which really sort of opened a lot of sort of interesting things for us. So while, for example, I feel for people who have lost income because of COVID. I think also in a way, it has really enabled us to look how to live a better life. Like if you think about it, the idea of having to travel, and you out of everyone who used to travel every 2 weeks, now you can really meet with everyone. You can discuss information. So I think, while the world has moved much faster now in digesting information, and information is available now to everyone. Like if you remember, you and I, used to really find an edge in sitting across the table with all of the people who are really thoughtful about what's happening. They would come from across the globe. Now all of that is delivered digitally. which in a way, made it sort of much more convenient instead of going and traveling or going to the office. But also by the same token, digesting all of this information requires, a much more sort of faster ability to sift through all of this information and make sense out of it. But by the same token, I think, I do sort of, uh, I do agree with you that this opportunity also, if we don't make use of it, it's going to result in challenging times. I mean, I think, uh, the whole subject of now being inclusive, in other words, taking care of people around you in one shape or another, is a new development. And I really hope that post COVID, people don't resort back to their old habit, but in fact, they do embrace these concepts. uh, uh, but I think, to me, the key mark here is, if you are aware of these changes, you will manage through, in my opinion. If you're not aware, or you're not willing to change, it's going to be very difficult, very difficult. And I guess, where you're sitting, I hear, in the news, how sort of the oil companies themselves are now aware of these changes. It's not that, they're saying no, nothing is changing and what have you. So that, that in itself tells you that the world is going to continue changing. Wouldn't you agree?
Absolutely. I mean, the oil industry was in the eye of the storm before COVID, if you think about it. And in fact, what's fascinating about this environment is that, I don't know, maybe there are new things that are happening, but everything that we're seeing reflects an acceleration of what we were experiencing before. So if you take the oil and gas industry, it was morphing into especially the IOCs, the integrated oil companies, were morphing into either renewable companies, power companies, or what they called energy companies. So that was the search for a new role in the world of ESG, the world where you're paying a lot more attention to planetary considerations, to green considerations. Now, with with COVID-19, this has accelerated the trend to some kind of transition. And there are those, as you were alluding to, who are probably saying, no, the world really hasn't changed. We're going to go back to where we were. But most people realize that the trajectory in the demand for hydrocarbons has changed. Now, whether it's changed dramatically or whether it's changed incrementally, it's changed. And people have realized that you're able to use renewable sources of energy in a more comprehensive way to kind of fuel and to fire all the activities, that we do. So the oil industry is undergoing this change. And if you look at what's happening in the Permian, right, in the shale industry in America, and it's important to understand that America went in 2006 from producing 6 million barrels a day to last year producing 13. And no one, really, very few people, especially in the oil industry, understood what was going on. I'm referring to the large companies. So this whole business of shale, it's not going away. It's changing. And these companies are changing. And these are mid-sized companies that are changing dramatically. I don't know about the future of the large companies, because the characteristic of the modern age is that companies are agile and that they're able to make decisions rapidly, effectively, and they take lessons and they move on. Large companies, whether it's GE, which we've seen, or Exxon, which was unceremoniously dethroned, right? Having been in the Dow since 1916, out, right? So I don't know if these large concerns are going to make it to the next level. And all of us, and as you were saying, all of us are having to adapt. And it's going to be very difficult for us to go back because there is no going back. I mean, if you go back 100 years when you had the Spanish flu, people didn't go back to where they were. There was different changes that occurred. And then you had the roaring 20s in the US, and you had other things that happened, which were also driven by geopolitical changes. So the point is, the digital world, which has been superimposed upon us, is facilitating and accelerating this change that's happening, which is making us and is forcing us to make more decisions. What that tells us, in my mind, is one thing: content is very important. So you mentioned earlier about sitting across the table and talking to people. In the current environment, all the discussions that you and I used to have with the people that would come see us from various parts of the globe to talk to us, we can now have those same discussions with people in this format. So we're not isolated anymore. No one is isolated, but content becomes king. And this becomes increasingly important beyond our area, which is finance, right? Which is the business of money. If you think about the healthcare industry, and now you're beginning to see finally telemedicine, you're thinking about education, which education hasn't changed in 300 years, right? You have 10 students, 20 students, 30 students that crowd into a class. You have a professor that sits in the front. Whole new world is opening up. And last but not least is you're at home, working from home. You have an environment where you can do everything. This working from home is dramatically going to reconfigure the way cities are, at least in terms of real estate. So big changes here.
Yeah, I want to go back to the changing world order, as in sort of versus having one superpower now dealing with others, because I think the I mean, as you know, sort of our main sort of message to people that we are sharing at Liwa is that diversification always wins, in a sense that you could be taking a bet in one country or in one sector, but then it's the nature of markets. You keep buying something until it becomes very expensive, and then it reverses. So now clearly I think China is coming up as a place for people to invest. In fact, a couple of days back, I put a post out that if you put a deposit in renminbi, you earn like 2.5, whereas in the developed world you're earning 0. And China is not a Mickey Mouse country, and so it's only a matter of time when the Chinese really open their capital account that that becomes a reality. So so with that in mind, I mean, how do you see that this sort of focus on what we've all have been used to, that the center of everything happening is the US, versus now looking at other areas? I know, for example, where you are sitting, you guys are also looking at China and other places, just because the nature of where the UAE sits.
No, that's an excellent point, actually. This is the challenge of living in a multipolar world versus living, in a unipolar world, which is what we had, after the fall of communism. And so that's a very, very, very important point. The other point that you made, which I think sometimes we forget, is that the only free lunch in finance is diversification. And I don't mean you just buy anything and say, "Oh, I have a diversified portfolio." I mean, there are ways to measure diversification, and you guys have been pioneers at Liwa Capital in embracing this concept of a balanced portfolio. So you're way ahead of most people. But the one thing I would comment on, which is fascinating because politics do matter, and I remember we used to have these discussions back in the old days at ADNOC about the importance or not importance of politics, is that China just sent everyone a very unambiguous message when they canceled the world's largest IPO, right? This was this Ant Financial IPO, and they sent a message to Jack Ma, and they sent a message to all of us, which was, hey, that's all fine and dandy, but we call the shots here. And I would say that in one fell swoop, they essentially reintroduced the risk element in being involved in China, when in fact, if you think about the experience that we've all seen since China since they were the first in the pandemic, and they were pretty ruthless about the way they contained it by sealing off a city and, pretty tough measures. But then they were also the first to recover, and everything looks good, and the numbers coming out of China are positive. So there's a lot of, hey, this is good, we should diversify, we should open our portfolio to Chinese investments, which makes sense, by the way. But now the powers that be, the Politburo, the top guys in China, they said, hey, we make the calls here. So every investor needs to think very carefully about the importance of the rule of law. And as much as, we laugh and kind of are probably shocked more than laughed at what's happening in the US, there are very important guardrails, legal guardrails, that have been set in by the Constitution. So you don't have arbitrary decision making. And you just saw something that was completely arbitrary. The world's largest IPO was canceled, and the money was returned to the investors, ostensibly because they hadn't paid attention to some lending factors, which we all know that for over 7 months they had these discussions. So this was a slap in the face to Jack Ma, because he had made some negative comments about the regulatory regime in China. So this is actually a very important reminder to us when thinking about diversifying, that the world is not every place is not the same, Every place is not America, every place is not Sweden, every place is not, the same.
You're right, Mark, but I think, see, this goes back to the idea of diversification. So now we know that every region has its own idiosyncratic risk, which is, to use it in a simple language, every region there is a risk in it in one shape or another. And I think, from the places where there is a good law, whether it's New York law or English law, each one has their own. And I think so China, of course, China has its own sort of its own risks. And I guess also there is a bit of naivety to think that you're going to access that billion-dollar consumer without having a risk in it. And that's why, going back to your point about diversification, so diversification really addresses the idiosyncratic risk. In other words, I really don't want to bet that, the place where there is the order, law and order, is immune from anything. And by the same token, I don't want to bet that China is now the new game in town and I should be always there. But I just think, that at the end of the day, people should really look around examples in history whereby, things can go wrong, whether you have an early indicator of it as a build up or sudden abrupt changes. And the only way to deal with that really is to diversify. Now, of course, add to it really the complication now, which none of us have experienced, is a zero interest rates across the whole curve, so as to speak, and the need to print money. So the need to print money is a new thing, because we've all lived through, really throughout our careers, through the dollar system, the Bretton Woods dollar system, where there was there was a stability. Obviously, we all remember the Plaza Accord and the huge volatility in currencies, and we might be going into something similar. But now, when you have a situation whereby governments have to print money, and rightly so, I think this is really the proper approach, to print money to alleviate the pressure of the average man on the street. But at some point, I think at some point it's going to start eating from our real earning, our real wealth, or real savings. And I think this is where really people are not paying attention to it. Now, it might well be that it takes quite a long time for inflation to show up because of the deflationary forces from the digital economy and what have you. But I think the more you need to print money to really take care of the average man on the street, the more that risks increase. So to me, I think again, diversification, and in the world we're living in also, ensuring that you have a protection against inflation is an important factor, which in a way kind of also raises kind of the question is that like, how do you invest your savings when we have now all of this data science and digital economy, fast processing of all of this data? Do you really go and just buy the market and not worry about it? Or do you want to go and pick your own investments, competing against all of these sort of players out there? Or do you kind of just go and search for these managers who you think have the edge, whether in a proper systematic process, or a firm culture, or the use of data science and what have you?
Yeah, you hit the nail on the head, and the issue of these abnormally low interest rates, right? And by abnormally low, I mean interest rates that are below the inflation level, which has been induced by the central banks, explicitly induced by the central banks, is an issue that people will look back and wonder, because ultimately it will have far-reaching complications. There's no way that you can create an environment where you flood the system with liquidity and it doesn't have aftershocks, and enormous aftershocks. I would also argue that the man on the street may not necessarily benefit directly from the low interest rates, only from the standpoint that large companies or wealthy individuals who take advantage of these types of financial machinations don't go out of business, and then there's some kind of trickle down effect that happens to the man on the street. But it's also a reflection that the fiscal systems have responded inadequately. And if you think about, let's take the European Union. The European Union, it took them a long time to come back with any response, because they're still living, talk about living in a different world. They're still living in the world which says, oh, I don't want to spend more money because I'm going to be encouraging profligate countries, in the Southern Mediterranean from not reforming their economies, and we're just going to be borrowing to spend money. That's a nice kind of story, which has really caused a lot of problems for the European Union. But it doesn't hold today. You just finished talking about the COVID world, and the European Central Bank, to counteract the absence of fiscal measures, has created negative interest rates, which is, these are dramatic concepts. Negative interest rates, conceptually, it's difficult to wrap your head around. You give someone 100 and you actually get back, 99.9. So the whole situation here with interest rates is very dramatic. And I would say, to your point about how do you manage a portfolio, I would say with great difficulty, because if you're using interest rates, which you have to, as the discount factor for everything that we look at, and you assume these rates, then a lot of other markets actually make sense to be buying them. And this is exactly what the monetary authorities have done. By reducing the absolute level of interest rates, they're forcing people to take risk. This in my mind will end up very badly, because these experiments we're not sure, how they will end up, and you're going to have the aftershocks from these kind of manipulations will cause problems. People talk about the stock market being overvalued. U.S. 10-year rates at 80 basis points. That's way out of bounds. The big question for everyone, the seminal question is, are you going to get inflation or not? And that's an interesting topic, and it's more than interesting. It's relevant to everything we do. If you get interest rates, you're going to have a rapid adjust. If you get inflation, you're going to have a rapid adjustment to 10-year notes to 2%. And you can imagine what that's going to cause. If you don't get it, then if you say, oh, no, we haven't had inflation for a long time, it's not going to happen, then you're living in a different world. But I would argue on this point that if it's so easy by suppressing the real rate of interest, by suppressing it, that you solve all these problems, then the tendency for politicians will always be to do more of this or to encourage more of this. So I don't see this ending well. I see this ending as a problem. And again, I think what you guys at Liwa are doing with a balanced portfolio approach, you're trying to navigate an exceptionally complex and difficult world for investing. Very, very difficult environment, with zero interest rate.
Yeah, I think, you need to have the option to adjust with the changing environment, with what you just described. If you don't have the option to adjust, as in you're stuck in one mode, especially if you are in illiquid investments, I think that becomes a challenge. One thing, again, sort of the positive side of me, so as to speak, is excited about now how much money is going to go into research to solve these diseases and viruses and what have you. Because, I've always, had this sort of issue with, like people spend millions of dollars on a fashion show or going to event that has, an entertainment angle in it, which is okay. It's good. It makes people feel good. But then, the amount of money that went into this preparation and these galas and what have you, and then you compare that to the amount of money that was going towards virus research. So one thing which is I am kind of happy about, that now everybody in the globe who has the means or the thinking is going to go into study these things. So it's going to be taken seriously. And I really, think that we might even find a cure for the common cold that we go and get the flu shot from. That we just find the way to deal with that. Just like people are talking about, even living a longer life because of the improvements in medicine.
Yeah, no question about it. And the one area that we haven't touched upon at all, which is probably one of the most fascinating areas of research and actual, changes, is the whole biology area, right? The biopharmaceutical. That's the whole concept of people living longer, because you're addressing a lot of diseases, and it's kind of been put to the wayside now because of this drive to come up with a solution to the coronavirus. But the changes that are happening in the biology space are dramatic in terms of lengthening people's lifetimes in terms of the type of surgery you can do. 10 years ago, certain surgeries would take 4, 5, 6 hours. Now you can do them in under an hour, and it's an outpatient. So these changes are moving ahead very fast, and it all has to do. Everything around us has to do with the fact that you're able to get data, right? You're able to store it because you have it in the cloud, and you're able to process it because now you have thousands of banks of computers that are working on it. So it's this whole data revolution that is making a change in all of our lives is because of this accumulation of data, and people are poring over all of the results of these experiments. So that whole world is changing. That's kind of even faster than everything else that we see. And because we're not involved in it directly, it's not apparent. But when we were back at Abu Dhabi Investment Council, we had made investments in the biopharmaceutical space, and we began to see at the time that there were groups that were moving into this space from the outside with private equity type money, private equity VC money. And what was fascinating was that those groups were essentially grabbing the top scientists from the large pharma companies and creating an environment for them where they would be able to focus uninterrupted on their work. And I'm going to come back to the point about the large companies here, just to kind of circle back to what we were talking about, oil and gas companies. It just struck me at the time that the VC private equity community, was identifying the talent, pulling them out of these companies, funding them with controls, with governance, right? They didn't just say, here, do whatever you want, I'll come back in a year. But they were actually providing the platform for the drug discoveries and for the new techniques. It wasn't the large companies. What they did, though, is once they discovered something, once they proved its value, then they sold it to the large companies because they have these huge distribution networks, and they're out, on their shelves. They don't have enough product, so they would buy it. But that's another thing that's happening is the atomization. Large companies are less relevant today than they were before. And if you think about the companies, that have risen to prominence, where they came from and where they are now, they were small. And now, of course, whether it's Facebook or Google, they also have to, Amazon as an example, they have to think through the scale issue. But we live in a world which is characterized by enormous change and acceleration of this change. And let's be honest, it's very difficult for all of us to countenance how to handle that change. Most of it is positive, but there are, a lot of people are being left behind. And that's something that you talked about, at the beginning, about how we're going to have to become more thoughtful about the whole world, as opposed to, I'm just trying to maximize my P&L. I think it's the dawning recognition that we live in a society, in a broader context. We can't just say, all I'm going to focus on is myself, and I don't care about anything else.
Yeah, which kind of, again, sort of brings me to the idea of, if you go and list the amount of change that took place this year, it will be kind of like, I think, this year, although we all say, I can't wait for the year to end, by the same token, we're going to go back and look at this year. We're going to see, man, the amount of changes. I mean, I can tell you just, from where I am, like the idea of dealing with reality, who are, the world you're living in the region. Do I need, always to go and, sort of have antagonistic views with the other people? The idea of looking at an inclusiveness of everyone. Like, I think, this year, I have to say, in the UAE, when the Crown Prince really made, gave a message to everyone that, the inclusiveness of everybody in this society, because this is what the fabric of society, the services, everything is a part of. I think, the idea of looking at how to the sustainability versus the optimization. I mean, this is kind of, again, the idea that, and sustainability to me initially, I looked at it as a source of inflation. But I think the further one started looking at it, sustainability actually came into the mindset of what, what is the thing that can stay versus just a short-term phenomena. And in fact, it made us also start looking about what we eat. Is the stuff we're eating something that is just a short fix that makes us feel good, or it's causing damages here to us? Look at the earth thing. I really think also, that now that there's so much money going to be spent by governments, they're going to upgrade infrastructure facilities that is going to be more earth friendly, and the list really goes on and on. So I really think that, the challenges ahead are many, but by the same token, it's really, in the world of the World Economic Forum, it's a great reset. It's a great reset, and it's happening, from the own households to the broader society, country, what have you.
Yes, it's a very, very good point. I just wanted to say that it's not well understood, but the founder of this country, Sheikh Zayed, was probably one of the people who was way ahead of his time, because he talked about sustainability before it became a concept that we all spoke of. He talked about the environment, talked about not destroying the environment that you live in, which, and he died, I think it was in 2004. And he was way, way ahead. He also talked about being more inclusive and having women in and being tolerant. So it's pretty amazing, and that the founder of this country talked about these things way before any of them, I don't want to say became fashionable, became understood, and people kind of embraced. So it all comes back to the same thing. But I want to make one point here, which just struck me, is about the new energy situation. We're going into a world where you're beginning to see negative prices. So in many instances, we've experienced in the West where there is a surplus of power that comes into the grid. So then you end up having negative prices. And that's actually spreading. It's not diminishing, it's spreading. And essentially what it means is that if I have a business and I can operate between 12 and 2, let's assume that's the time the maximum rate of negative prices is, I'm going to be buying electricity at a negative price, and my cost of production will be much lower than someone else's. So I'll be able to provide a service to you and to other people at a lower price, and so on and so forth, right? Because I could also aggregate those prices and sell them to people, put them in batteries, do things. So once again, you have a huge shock to the system where the factors of production, to use Marxist terms, right, are negative prices, which we've never seen before. So think about what that's going to do to a lot of businesses. I mean, even the business of something as simple as buying and selling stocks. 6-7 months ago, you had one major company that came out and said, okay, you can buy and sell on our platform for free because we're looking for other business. So think about what happens to a business when someone says, hey, you can now, you can come into my system and you can buy that, you can have this for free. You don't have to pay for it. So it's changing so much and turning things upside down and actually encouraging this whole sustainability thing because now people can become more conscious. But it's also dramatically altering the way we do things and the way businesses are set up. Because if you're able to avail yourself of negative prices, you're going to obliterate a lot of other businesses that are not. And let's be honest, again, it's the large company syndrome. Large companies are not going to be as agile to take advantage of what's happening. And moving aside from the companies we've talked about in the biopharmaceutical space or the oil and gas, think about banks. But what did Bill Gates say? We need banking, but we don't necessarily need banks. And what you're seeing with this fintech revolution is smaller groups coming in, cannibalizing profitable businesses from the banks, stripping these businesses away and reconfiguring them on different platforms. They're not there yet, but by the way, that's what Ant Financial had done. So all these together are leading to this world that you're talking about, the more inclusive world, a different world than you and I have grown up in, a whole different ballgame.
Yeah, you're right. The banks. I'm really sort of, I'm really shocked how I'll talk, about sort of myself, how, sort of out of touch I was with the fintech or the digital banking, in the essence that now I can see why, back in the days when I was in the board of National Bank of Abu Dhabi, why, the calls was you don't need branches, which is the world today really sits in your mobile. You don't need a wallet. You go out, you really don't need to carry a wallet. Everything is in that sort of e-wallet, you want to call it, whatever you want to say. And the reality then, so what does a bank do? I mean, at the end of the day, I hear about the CLO equities, which is basically like another bank that the equity piece, you own it, and the CLO ends up giving out loans. Now, obviously, the basic function of a credit selection remains there, but the overhead of running an organization and all that stuff is gone. And it is gone. It is gone for good. From the need of an ATM to the teller machine. I mean, I will give you an example. I used to, when COVID came, I was thinking the idea of paying the lady at home, going to the ATM and giving her cash and wearing the gloves, worrying about, the virus. Then I discovered there is an app that actually you can transfer to her, and it is good for her, because when she transfers back home, it's a cheaper rate. So all of this is happening from my office on my phone. She also receives it on her phone, and then she does the transfer back home instantaneously, versus look at what was happening before. I needed to go to the ATM to draw money to give her, then she needed to go to the exchange and do that. And all of these platforms were available, but we were shy from them. So the ramification of all of this, really, in terms of real estate, manpower, man, it is so much. And the interesting thing, we all love it. It's not that like, I feel like I feel good going to a branch. I don't want to go to a branch. I don't want to expose myself to the virus. And even after the virus is gone, I really don't have time. I'd rather sit with my family, read something, versus spending time going to the bank and what have you.
And standing in line.
And stand, yeah. Mark, good catching up. Thank you for your time. I think we should do this more often, every now and then, when we see there is something interesting we want to kind of discuss.
Great. Thank you, Hashim. There's a lot going on, so I'm sure we'll have many more discussions. Thank you for inviting me.
All right. Thank you.